Today, we're exploring one of the boldest and most controversial initiatives in U.S. immigration and investment history, the Trump Gold Card. Originally launched as a $5 million program, the price has now been slashed to just $1 million, instantly transforming it into a high-demand gateway for global investors seeking residency in the United States. In this video, we'll break down the price change, target markets, program mechanics, potential legal hurdles, and the implications for international capital flows and federal revenue. The first and most attention-grabbing development is the massive price cut of the Trump Gold Card. Originally pegged at $5 million per card, the program has been drastically reduced to $1 million, making it far more accessible to high-net-worth individuals globally. This pricing shift immediately positions the Trump Gold Card as one of the most attractive golden visa programs in the world. For comparison, similar schemes in Singapore currently require $8 million, while New Zealand's investor visas hover around $3 million. By reducing the threshold, the U.S. is now aggressively competing for international capital, offering residency, financial access, and lifestyle benefits at a fraction of the cost of other major global programs. The rationale behind this price cut seems twofold. First, a lower entry point can dramatically expand the applicant pool. Second, it signals a political and economic strategy to attract capital inflows that could stimulate domestic investment, job creation, and federal tax revenue. However, this move is not just about numbers, it's also about branding. The Trump Gold Card is positioned as a premium, exclusive entry into U.S. society and markets, while the lower cost amplifies its accessibility without diluting the perception of exclusivity. Investors now perceive a golden ticket to the U.S. at a price that feels attainable but still prestigious, creating both hype and urgency in the international market. Who will likely be the primary beneficiaries of the Trump Gold Card at $1 million? Early analysis points to investors from China and India, two of the world's largest pools of high-net-worth individuals actively seeking international mobility. The card offers U.S. residency, which comes with immediate access to high-quality education, world-class healthcare, and U.S. banking and financial markets. For wealthy families in Asia, this is more than just an investment. It's a strategic life decision. Parents see opportunities for their children to attend top U.S. universities, gain employment in high-growth sectors, and enjoy the protections and privileges of permanent residency. In addition, these markets have historically demonstrated strong appetite for real estate, tech startups, and alternative investments abroad. The Trump Gold Card effectively opens a pathway for capital to flow into U.S. assets from residential real estate to venture-backed startups, creating a dual benefit: residency for applicants and economic stimulus for the U.S. This slide also highlights the geopolitical dimension. By offering a pathway for international investors to legally reside in the U.S., the program strengthens the country's soft power. High-net-worth individuals who invest in the U.S. become stakeholders in the domestic economy, potentially influencing cross-border business partnerships, philanthropy, and broader international engagement. In short, the Trump Gold Card at $1 million is not just a visa. It's a financial and strategic opportunity with global implications. The Trump Gold Card program was initially introduced via executive order, leveraging provisions from existing EB-1 and EB-2 employment-based visa categories. The current plan envisions the issuance of 80,000 gold cards, creating a finite supply that helps maintain exclusivity and perceived value. There is also a proposed platinum card priced at $5 million, which promises additional benefits, including enhanced tax incentives, potential corporate structuring advantages, and other premium perks for ultra-high-net-worth applicants. These tiers are designed to capture both mass affluent and ultra-rich investors, creating a multi-level market segmentation strategy similar to luxury goods or private equity offerings. Despite the excitement, there are substantial legal and logistical hurdles. The program is built on EB-1 and EB-2 visa frameworks, but it represents a significant reinterpretation of those categories. Questions remain about whether Congress or federal courts could challenge the executive order, potentially delaying implementation or altering key provisions. Another challenge is operational. The Trump Gold Card website is not yet live and applications are not open. Processing systems, compliance checks, and verification protocols must all be established before cards can be issued. Investors, particularly international applicants, may hesitate until the program demonstrates reliability and legal clarity. Additionally, the program's rollout could face political scrutiny. Some critics argue that offering a U.S. residency pathway in exchange for capital could bypass traditional merit-based immigration channels, creating tension with existing immigration law and policy. Navigating these hurdles will require careful legal strategy and coordination with multiple federal agencies. Finally, let's examine the market reaction and outlook. International investors may adopt a cautious approach, waiting 3 to 6 months for clarity on processing times, legal challenges, and operational logistics before committing. Yet, the potential upside is immense. The program could generate $100 billion in federal revenue if fully subscribed, making it one of the largest single capital infusion programs in U.S. history. The Trump Gold Card also creates a framework for expedited access, potentially bypassing the existing EB-1 and EB-2 visa backlogs. For wealthy applicants, this is a highly attractive proposition, both a residency solution and a gateway to U.S. financial markets. Long-term, this initiative could influence global investment patterns, particularly if other countries respond with competitive visa programs or adjust existing golden visa thresholds. Capital flow into the U.S. may increase, impacting real estate, technology startups, and other strategic sectors. From a broader perspective, the program demonstrates the intersection of policy, politics, and finance. A single executive order has the potential to reshape international investment flows, generate significant federal revenue, and provide new pathways for high-net-worth individuals seeking U.S. residency. For investors, policymakers, and applicants alike, the Trump Gold Card represents a unique high-stakes opportunity that blends exclusivity, strategy, and economic impact in a way few programs ever have. In conclusion, the Trump Gold Card is more than a visa program. It's a financial, political, and social experiment rolled into one. From the dramatic price slash to the potential $100 billion revenue impact, this initiative could redefine the way international capital interacts with U.S. residency policy. As the program develops, it will be critical to watch legal challenges, operational rollout, and investor uptake to understand its ultimate impact on both the U.S. economy and the global elite mobility landscape.